Hi, this is Karen Gaines, your nonprofit finance guide, and today we are going to talk about the different types of internal controls. So, on this channel, I've talked about internal controls quite a bit, and I really believe in them. I believe they provide, and they keep integrity in the financial statements. They provide order and clear expectations to the organization, to staff, employees, everyone involved in the whole process. And just overall, they make the organization run smoother. And therefore, you experience less friction, less conflict, just less tension because everyone knows what they're supposed to do. There's expectations, and there's processes put in place that prevent a lot of bad things from happening, frankly. Okay, so there are three types of internal controls. They are preventative controls, detective controls, and corrective controls. All right, so let's start with preventative controls. So preventative controls are designed to prevent errors and fraud before they happen. It's really, as the name implies, preventative. They prevent bad things from happening. They prevent mistakes and errors from ever happening. Okay, it's more so taking proactive measures to prevent mistakes, and at the same time making sure operations and processes are carried out in a proper manner. So I'm just going to use an example of a preventative control. So earlier in my career, I had the responsibility of obtaining bills, entering them into the accounting system, and then once those bills were entered, I had to give those bills to my manager, and he reviewed all of the bills and signed off on them. Every so often, he would come back and say, hey, what's this bill? Or I don't think we should pay this bill, or not pay it quite yet, or this amount don't look right, et cetera, et cetera. But that was a preventative control put in place so that all bills that came into the organization and enter in the accounting software were just not automatically paid. There was another set of eyes on the bills. Just have to double check to make sure that the proper bills were being paid. The organization I was working in was a large organization, and every so often a fraudulent bill would come in, and their hope was that the person entering the bills would just go automatically enter the bills and that they would be paid. But since that control was in place, it's more difficult for that type of thing to happen. All right. Other examples of preventative controls include access controls. All right. And this has more so to do with restricting access to a physical room, physical location, or digital resources. So just think about using passwords to get into certain systems, using badges to get in certain rooms, keeping door locks, etc. Just putting a barrier up so that not just any and everyone can have access to a location or software. Another example is employee background checks. And you see this a lot with human resources. Before they bring someone on, they do a background check to make sure that the person they're hiring don't have a whole bunch of criminal convictions associated with them, or they can identify a lot of red flags before bringing that employee on. All right. So that is preventative controls in a nutshell. Next type of internal controls is the detective controls. So these controls are designed to identify errors, mistakes, and fraudulent activity after they have incurred. All right. So, unfortunately, you can't like detect all or prevent all mistakes and errors from occurring. So there are detective controls. All right, so an example of a detective control is an inventory count. Think about inventory. So a lot of warehouses, manufacturing businesses, they do annual inventory counts, and annually or even monthly or quarterly. They do periodic inventory counts. So what they do is they go to each part and they count the inventory. All right. And they make sure the inventory that is in the warehouse agrees with what is in the accounting system. So if they go in the warehouse and they count 100 widgets, however, in the accounting software, it's listed as having 500 widgets. There's something wrong. There is a discrepancy of 400 widgets that's not accounted for. So now, the person doing the inventory count and others really have to figure out, well, why is there 400 widgets missing? Is someone not entering in widgets when they're used? Is someone stealing the widgets? They have to figure out what happened and, hopefully put a control in place or update their control. All right. So another example of a detective control is reconciliation tie-out. And this really ensures that the reconciliation report that is completed for a balance sheet account ties out to what is on the books. So the most common, most popular type of reconciliation is the bank reconciliation. Just making sure that bank reconciliation ties out to the bank statement and what is in the accounting system. Another type of detective control are audits, both internal and external audits. Auditor comes in, reviews the books, asks questions, and see if there are any mistakes or fraud that is taking place. Another example of detective controls is variance analysis. Okay, and that's really just looking at your actual versus budget financial statements and seeing if there are any type of variances. And if there are, then you need to go back and review, hey, why are these variances taking place? Because it could be a legit variance, but it also could be a mistake. All right. Third type of internal control is corrective controls. All right. So these controls, they aim to fix or correct errors that have been identified and prevent them from happening again. It addresses the steps that should be taken when an error has occurred. All right. So I'll give you an example. Of something that happened to me just last night. I went to the store and I purchased a pineapple. All right. I cut the pineapple up, and on the inside it was brown. And of course, I'm bummed out because I have a rotten pineapple. So what I'm going to do, this is not the first time something like this has happened to me, but what I'm going to do is go to the store and go to customer service and say, hey, I got a rotten pineapple. I would like to exchange it. And they'll say yes, and I'll get a new pineapple. So, but that customer support person, they themselves will have a process for processing that exchange that just took place. All right, they're going to go in their system, type up, hey, rotten pineapple, mark it some type of way, and it's going to get tagged. All right, and so that's an example of a corrective internal control. It is basically processes or instruction direction put in place when an error occurs. So when you're talking about fruit or vegetables, it's more likely than not I'll probably get another rotten piece of fruit. It's something that I'm sure they try to prevent, but they can't, they can't prevent it 100% of the time. They know there's going to be some errors. They are expecting a certain percentage of, the fruit and vegetables to be bad because they just can't catch everything. All right. So therefore, they already have a process in place for when they receive those rotten fruits and vegetables. Customer comes back, return it, and get an exchange. All right. Another example of corrective controls is creating journal entries. All right. Most accounting softwares are set up where you just have to enter things like enter a bill or enter cash. There's like a, more so seamless process to doing things. However, there's going to be some cases where a manual journal entry is going to have to be made. And, the goal is to never make manual journal entries, but it's just not realistic. At some point, the accountant's going to have to make a manual journal entry. They're going to see something and a mistake that's made. It's like, oh, that's not right. And they're going to have to make a journal entry to correct that error. Another example is retraining employees. You may have hired an employee, trained that employee, and that employee is making mistakes. And so, that employee needs to be trained again to fill in the gaps as far as what got missed. Why is this employee making the same mistakes? All right. Another example is an incident response plan. All right. And unfortunately, a lot of businesses, organizations, they know probably at some point, their system may get compromised. They may have a breach of security, or fraudulent act takes place. Maybe a fraudulent bill takes place. And there needs to be instruction for that when a breach happens, when a fraudulent activity happens. And so corrective controls has to do with, hey, what do you do when a mistake is made? We know a mistake is going to get made, but what happens when a mistake is made? What do we do from there? And then hopefully after that mistake is made, maybe, figure out some things, or think about how can we prevent this from happening, or is there a way to prevent this from happening? Like the fruits and vegetable example I gave earlier, like there's probably no way to ensure 100% of those fruits and vegetables are fresh when they're delivered to the grocery store. Okay. But they can probably put some type of control in place. Maybe the person putting the fruits and vegetables out can, do a quick scan to see, hey, are any of these fruits and vegetables rotten? And then take those out before it gets into the customer's hands. All right. So hopefully this video has been helpful for you. Let me know what you all think. If you're watching via YouTube, make sure you like, comment, and subscribe. Thank you for watching, and have a great day.